Accounting is a crucial aspect of managing financial transactions in any business. Understanding the flow of funds, organizing records, and visualizing the impact of debits and credits are essential skills for accountants and bookkeepers. One powerful tool that aids in these tasks is the T account. Representing accounts in a clear and visual format, T accounts allow for a comprehensive understanding of financial transactions. In this video, we will explore the significance of T accounts, their structure, and how they contribute to the practice of double-entry bookkeeping. By the end, you'll have a solid grasp of T accounts and their role in effectively managing financial records. Unlock the secret to financial success with Koins, where numbers come alive and your accounting game thrives. So stick around as we embark on a comprehensive journey into the world of T accounts. Before we dive into T accounts, let's take a moment to understand the concept of an account. In the realm of accounting, an account is a designated space where financial transactions that affect a related group of items are recorded, sorted, and stored. It serves as a central repository for organizing and tracking the flow of funds within a business. A T account is a visual representation of an account, derived from its distinctive T shape. This layout facilitates the clear differentiation between two fundamental aspects of accounting: debits and credits. Debits are recorded on the left side of the T account, while credits are recorded on the right side. To further enhance clarity, you can label the top of the T account with DR for debits and CR for credits. In the context of accounting, the general ledger serves as a comprehensive record of all financial transactions and accounts within a business. It acts as a centralized repository where all the individual T accounts are compiled, providing a complete and organized overview of the financial activities of the business. In its simplest form, a T account consists of two columns. Debits are recorded on the left side, while credits are recorded on the right side. For ease of identification, you can label the top of the T account with DR and CR. It's important to remember that debits increase certain accounts, while credits decrease them. To help you remember which accounts are impacted by debits and credits, you can use the mnemonic dealer. Dividends, expenses, and assets are increased by debits, while liabilities, owner's equity paid in, and revenue are increased by credits. To illustrate the practical application of T accounts, let's consider an example. Imagine your business has a cash account with an opening balance of $100. Throughout the month, you make various transactions, such as paying a bill for $40 and purchasing supplies for $25, resulting in a closing balance of $35. Traditionally, you might calculate these changes linearly. However, when utilizing T accounts, you visually represent the flow of funds. As cash is an asset, part of dealer, debits increase it, and credits decrease it. Therefore, the closing balance of $35 would be recorded on the left side of the cash T account. If the supplies had cost $65, resulting in a negative cash balance or an overdraft of $5, the closing balance would be recorded on the right side of the T account. If you've liked the video so far, please give it a like, subscribe, and let us know in the comments what you would like us to cover next. Now back to the video. You may wonder why we utilize T accounts. Even in this simple example, T accounts prove invaluable, allowing us to quickly identify relevant information within the general ledger. For individuals new to accounting, jotting down T accounts while working through problems can help visualize the process and aid in comprehension. Over time, with practice, you might develop the ability to mentally process this information without relying on T accounts. Let's recall a term called double-entry bookkeeping. This principle states that every financial transaction must have an opposite corresponding entry in a different account. When applying this principle to T accounts, it means that to record a transaction, you need to document both sides of it in at least two T accounts. To further deepen our understanding of double-entry bookkeeping using T accounts, let's explore a series of transactions that took place during the first month of my landscaping and lawn care business. Transaction 1. In this transaction, as the business owner, you invest $100 of your own money into the business. As a result, the business issues you $100 worth of stock. This transaction impacts both the cash and stock accounts. To accurately record and track this transaction, T accounts are utilized for both accounts. The cash account will show a debit of $100 on the left side, representing the increase in cash, while the stock account will display a credit of $100 on the right side, indicating the increase in stock value. Transaction 2. To support the business's operations, it decides to take out a $200 loan from the bank. This transaction affects both the cash and loans payable accounts. T accounts are employed for both accounts to accurately record the transaction. The cash account will reflect a debit of $200 on the left side, representing the increase in cash, while the loans payable account will display a credit of $200 on the right side, signifying the increase in the amount owed. Transaction 3. In this transaction, the business spends $30 in cash to purchase lawn care equipment. Both the cash and equipment accounts are impacted. T accounts are used for both accounts to track the transaction. The cash account will show a credit of $30 on the right side, representing the decrease in cash, while the equipment account will display a debit of $30 on the left side, indicating the increase in equipment value. Transaction 4. The business spends an additional $50 on landscaping supplies, paying for them on account. This means that the payment will be made at a later date. This transaction affects the cash, supplies, and accounts payable accounts. To accurately record this transaction, a new T account is created for the accounts payable account, while T accounts for cash and supplies are utilized as well. The cash account will reflect a credit of $50 on the right side, representing the decrease in cash. The supplies account will show a debit of $50 on the left side, indicating the increase in supplies. The accounts payable account will display a credit of $50 on the right side, representing the amount owed to the supplier. Transaction 5. In this transaction, the business secures its first client and earns $150 by landscaping. However, during the process, it uses half of its supplies. This transaction involves multiple accounts. The revenue account increases by $150, reflecting the earnings from the service provided. The cash account also increases by $150, representing the receipt of cash. On the other hand, the supplies account decreases by $25, indicating the portion used in the service. Additionally, a new cost of sales account is created to record this expense. The cost of sales account will display a debit of $25, representing the decrease in supplies and the corresponding expense. By utilizing T accounts for each transaction, accountants and bookkeepers can accurately track the flow of funds, record the impact on various accounts, and maintain a comprehensive overview of financial transactions. T accounts provide a visual representation that simplifies the process of understanding and analyzing the financial activities of a business. To recap, an account is a designated space where financial transactions are recorded, sorted, and stored. A T account is a visual representation of an account with debits on the left side and credits on the right side. The general ledger serves as a comprehensive record of all financial transactions and accounts within a business. Double-entry bookkeeping ensures that every financial transaction impacts at least two accounts, allowing for accurate and balanced record keeping. We would love to hear your thoughts on T accounts. If you're an accountant or bookkeeper, do you find T accounts useful in your day-to-day work? Don't forget to comment below with your thoughts, questions, and accounting victories. And make sure to hit that subscribe button and turn on notifications so I'll see you in the next episode of Koins. Happy accounting!